Hello and welcome to the third subsection of the first section of the mentfx private mentorship, being structure. Okay, so we've spoken a little bit about overall structure and how structural points are put into the market and why they're important, which is institutional order flow is held at these points because if they want to continue making money in a certain direction, they will hold these points. Now, the reason it gets confusing, as we understood in the previous subsection 2, is because structure can shift back and forth on any time frame, as well as within that time frame, as well as within those time frames, lower time frames, because structure can be delivered in multiple ways. Now, how do we read whether a structural point can count as a potential structural point on any given time frame? The way we do that is based on pretty much a mini two-step rule. And that two-step rule is basically recognizing that the structural move isn't a guaranteed continuation, right? So if there's a move of this sort, that does not qualify as a validated structure in a given direction. However, a move that has a retracement, which I guess you could argue is either more than a 50% retracement or just one that looks like a retracement to even your own eye, is a retracement that can be counted as a structural point in the market. And what I mean by that is this, for me, could be potentially valid structure. This would never be valid structure. This, for me as a trader, right, it's going to be different for some of you, could be potential valid bullish structure, but this is valid bullish structure, okay? And what I mean by that is, as you can see, if we took a measurement, right, if you look at this never came anywhere. This barely made a little hiccup, right? And usually the way this looks in a chart is moves of sort, right, and continuations. And there's like, this is like the red candle, right? And this is all your green candles. This is not this right here is not a structural move backwards. Now, again, if you went inside of this price action on a lower time frame and looked at it, it might look like this, right? That red candle could look like that. And that means that on that lower time frame, that is actually valid structure. Potentially, right? That is perfectly valid, but understanding which time frame you're on and understanding how to draw that time frame's bias or that time frame's structure is very important in understanding the way that price is delivered to you. Now, there's a few ways to see that. Again, like I said, either you look at a movement and you just recognize that the move from here to here had a retracement that was more than 50%. So that counts as a good enough structural new low to be put in place. And therefore, when this breaks above this liquidity, structure has been confirmed to be bullish. Okay. Now, on that same note, if you have a move and that move does not go to at least 50%, but comes in, right, and it makes a retracement that looks worthy enough of your own idea of what a retracement is. So again, this is where studying a chart is going to be very, very important to some of you, because for instance, if I saw something of this sort, so we have a bullish push up, right? So bullish push up, maybe a tiny move down, bullish push up, and then we finally have a bearish move down like this, right? Maybe some kind of boom and continuations higher, just like that. This, for me, despite the fact that if you take the high to the low and look at the 50%, despite the fact that this did not come lower, the retracement is a large enough retracement for me to consider it as a structural point. Because what happened is when I look at this, I instantly see that there was potential entries on behalf of the composite man forming these areas of demand, which we'll talk about again in the future course content, to then push the structure of this time frame of this market higher. And that will mean to me that there are enough orders that they accumulated or something of that sort in these areas for this specific time frame, right? Because remember, this could be part of a larger time frame's bullish push, which could be part of an even larger time frame's bearish push, et cetera, et cetera. But of this specific time frame's push, this is enough for me to consider that the institutional order flow on this time frame has shifted and is going to remain bullish above this point, which to me would mean that an invalidation of this specific low would completely invalidate the structure on this given time frame. So again, as you can see, structure or the validity of structure, and we're going to be looking at this on candlesticks in a second, can be seen through literally your own eyes and understanding that structure is something where you have a worthy enough pullback to call a real retracement. Because what you're believing in that retracement is that that retracement was made for the purpose of gathering more orders and taking more people out of the market using the grabs of liquidity by putting in a lot of orders, creating those demand zones or supply zones. And in this case, since we're bullish, it's demand zones. And again, do not be too confused about these things because we will talk about them in the future of the other mentorship private content. So then we can resume the bullish push, and we won't, and we understand that we also won't be getting below these points here. So taking a look back at what's going on here, let's consider this from a standpoint of delivery and price in the idea of price being validated with moves like this. So again, let's look at it from the standpoint of candlesticks. Now, we understood that we were in this bullish push. Okay, this bullish push was then met with this bearish push down. Now, within that, there is actually structure that we could potentially use. And what I mean by that is we have this push down, we have this mini retracement, and we have this push down. Now, this is one of those examples where it is up to you whether or not you want to consider that a valid structural point. And what I mean by that is because of the fact that it didn't make a more than 50% retracement, right? So if we take a look at the fib from the high to that low, oh, actually it did. So in this case, you could consider that a fully plausible structural continuation or structural validation. So even though larger structure on the same 4-hour chart has only shifted bearish here, you could consider this shift here to still be bearish, which means you're expecting this supply zone right here to hold in the future for potential bearish pushes. Let's follow this along from the standpoint of validation using structure. So even though our larger structural points on the 4-hour are denoted with these highs and lows we put into place, the inner chart price work can still have different structure within it. This is why it can get so confusing. So we have this push down, push up, push down, right? None of this counts as structure. This does not count, right? You can't go boom, boom. Actually, you could probably use this one, but I'm just going to use it from here. Boom, boom. You can't do this. You can't go low, 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 something like that, right? You can't do that. Maybe on a lower time frame, this will work. However, on this specific time frame, this specific 4-hour time frame, the structure, as seen by me, is not even this. It's not this, right? Instead, it's this. Then what? Push up, push down. And yes, this is still potentially valid. To me, that would be a valid structural point. Continuation. Okay, so now what's happening is you have bearish structure overall, but within that bearish structure, you actually have more legs than you had thought before. And this is what validating structure actually looks like. Then we have this push up. We have this low, right? So we're just drawing these lines in, ultimately. We're pretty much just tracing price. And we have this push up. At the point that this push up happens, even though we're overall bearish, okay? So this is something that's very important right here. So make sure you keep this in mind and you study this. Even though the overall 4-hour is still bearish, the fact that we have validated structure using candles lower does still mean that this bullish push is valid. So if you had a bias, or if you were expecting bullish prices, you could still expect bullish prices from these areas of demand in the future when price taps them to expect higher prices. Why? Because just because the overall swings are projecting these types of highs and lows being printed in the market, the actual moves of the candles are what matters, because the candles are the ones that are showing us whether liquidity is being taken, whether that liquidity is potentially being accumulated or distributed for, for bullish price action or bearish price action. And then if those areas are to hold, then we understand where institutional order flow is now heading. So here is your bullish push up, your move down that gets more than 50% easily. So your structure has almost been validated. And as we get above this specific high, as we've spoken about here, the second we get above this high, right? So you have a high get put in place, right? You have a move back that retraces, and then you have a new high put into place. That is structural continuation. The second this high is broken right here, right? And that high can, again, break with either a wick, and you can consider that, or you can consider a body. That is up to you. That is entirely up to you. So this is valid for bullish structure. However, it's still part of what? a bearish structure on this specific time frame. Okay, now let's follow this along and continue following it. So again, as we're doing this, you'll start to notice that you can't just specifically trade structure. Well, you could, but this is all part of understanding how to form a bias for future price action. So we have this push down, this retracement, we count this. And the second we get this push right here, this is confirmed bearish structure. And what you'll now notice is that this confirmed bearish structure on the inside is actually now confirming the overall bearish intent that we have already shown ourselves with this higher 4-hour structure. So that means that now sells from these areas of supply are actually much more probabilistic than these original buys from here. Why? Because now we're starting to add confluence, and this confluence is seen. We still haven't gone over the other two sections of this entire mentorship, but what we're seeing now is we have seen higher structure in the form of bigger structural points met with the validation of candlestick structure, right? So there's two types of structure. One structure is overall directional structure, which is built by the institutional order flow, but the second one is also based within that, but it's based on the actual candle movements. And when you have those two come together, your confluence and probability of a given direction has now increased substantially. So as a result, let's keep following this. We come up into this supply zone, we hit it, and from there we move. Now, this is where it becomes interesting. You can consider this structure. You can. This is a tiny move. This is an example of what we have right here. A move that does not get to the 50%, however, can function as a continuous bearish push. And same thing happened here. Potential bearish push, boom. And now if you notice, if you follow these mini potential bearish pushes, then this supply zone would hold as a perfect area for you to sell at using just the confluence of structure to take yourself to lower prices. Now, as we get lower, again, your areas of supply would be here and you could continue to expect these pushes, right? But right now we're following the structure of just candles. So in this case, where's candlestick structure now? We have this push, and now we have another example of something that is up to you whether or not you want to consider it structure, right? So this is an example of this. So you have 1, you have 2, and this is 3. And 1 should never be considered, but 2 can sometimes be considered. It's up to you, right? And 3 will always be considered, at least for me, from a candlestick structural perspective. Okay, so in this case, we did not get a whoops, let's get rid of that. We did not get a retracement of more than 50%. However, we had a retracement that made a dent enough to show us that it wanted to put in a new low before moving higher. Okay, now as we follow this and we get here, this is something that is part of this number 1. This number 1 does not count for me as any structure. And what I mean by that is it wasn't enough to make a real dent before then moving higher. What it did is it just kind of, this made a dent and continued. This didn't make a dent, right? That doesn't count, but this made a dent, continued. This did not make a dent and continued. This just kind of did this, right? We keep following this. This one did that, made a little bit of a dent, moved higher. This could have been a potential area that you could consider for buys, right? Now again, this is all part of just this structural move. This is not only the way we get involved. You will learn a lot more. However, right now you need to understand these concepts because they are all part of the way that we are going to gauge where we are in the market and how we're going to trade it down the line, okay? We have this push down, right? Potentially shifting bearish and a push up, bullish, right? And we keep following this. So at this point, I'm just going to follow this down for you on just the 4 hour. We have this push, it's shifting bearish, push up, shifting bullish, it's bullish, right? So now we have actually done what? We've shifted bullish, right? We've made a validated bullish structure, right? Because the second we make a pullback and break above the high, we've created bullish structure using candlesticks. We haven't created the bullish structure using the higher time frame structural points. Always remember this. The higher time frame structural points, or just the structural points, are not the same as the structure found in the candles, right? They are two different things. You need to always remember this. This is why structure can get very confusing. But if we follow this, you can now see that this area right here of demand, which again, we will talk about in the future, so do not worry too much about it, got tapped perfectly, and we had continuations, right? And from there, we had this continuation, boom, expecting this to continue. Now that did not continue, which is fine, because inside there, you can see we actually had a sell on here. We'll talk about this stuff in the future. but it was based on whatever we had on the lower time frames in there. So on this specific time frame, price has just done what? Shifted potentially bearish, right? Getting below these lows on a candlestick, on a candlestick basis, right? But on the structural basis of the higher time frame structure, we're actually still bullish. So this is where, for instance, the candlestick validation does not confirm the overall bias confirmation. So instead, you might wait for more confirmation for the two to be attuned to each other, or work around the lower time frames. So the point of this was to explain that the validation of structure using just candlesticks is very different from just the structure that you can find on, right? So as we spoke about before, on overall structure, right? So even though daily structure is this, right? Boom, 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 high, right? The actual daily candlestick structure is as follows: high, low, high, low, high, low, high, bearish, even though it's bullish overall, bearish, still bearish, potentially bullish, 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 potentially bearish, bullish, bullish, shift bearish, remain bearish, validate bearish, continue as validated bearish while still making inner validated bullishness, and then shifting to validate more bullishness. So again, remember, this is all going to be part of understanding how to find your points of interest, which are going to be at areas of supply and demand and are going to be intertwined with the ideas of imbalance and inefficiency and stuff like that. However, you need to understand this idea of market structure and how the market can deliver itself to you in multiple ways before you make the next step to even trying to spot supply and demand or even Wyckoff. Structure is it is the core foundation of everything that is smart money ultimately, okay? So that is structure, that is confirming structure, and I will see you guys in the next course video. See you guys then.